Hey folks, and welcome to this video. So today I'm going to show you how to perform this analysis so that we have a framework that we can all use to share trade ideas in the room. So earlier in the week we spoke a little bit about a couple of different members taking a symbol and performing the analysis once or twice a week, or as often as they feel like doing so, and then just posting that in the form of a screenshot in the room. Okay, and I think that'll be very good because it helps us go over the methodology methodically, and it also enables us to focus on the things that are important when scouting trades. So I'm just going to do that very quickly. So first of all, what I'm looking for when I'm looking to do a trade is I need to see a major high and a major low. Okay, and this is important because the reason that the high is a major high and the low is a major low is because that there were sellers and buyers at these points, and so it's really important that we understand why we have to identify this major high and this major low. And if we look at this chart, this is just any old chart. What is this even? Australian dollar, Swiss franc. But notice that I have a low, but I don't yet have a high. And so what I have to do in such a situation is I have to keep zooming out until I can see my major high and my major low, and eventually we'll see it. And now we can see it. Okay, so we have, as a matter of fact, we have our high and we have our low, and we also have a low here. Okay, so this is really interesting. This is very important to us. So what I'll do is I'm going to focus on this move here, keeping in mind of the fact that we are potentially wriggling higher because we've kind of reached like these lows here. This is a nice turning point. We got a little bit close, and now we've managed to take out a high here. So we have a shorter term. I think we have a bullish bias. Okay, just based on what we can see on the chart. We came down to this one here. This is a child. Price came to it, tested it almost, and now it's wriggling north. So in a situation like this, we can go back to the smaller time frame because we know where we have our major highs and lows. I'm just going to zoom out so that we can see a little bit more. I'll do it like that. And so now we can mark off the sides of the chart. Okay, so what we'll do now is we'll mark off the high and the low. And I'm going to try and do this using my drawing tool. So first of all, we're going to mark off the sell side. So that goes from the high to the low. So the sell side. And I'll explain what this means in just a second. And then we have the buy side, which goes from here to here currently. Okay, so the reason we do this is because we want to identify first and foremost the origin of this move. Okay, and we haven't done that yet, so we'll do that now. So an origin is just going to eclipse. Just going to mark, go on the color, make this blue. So I'm going to mark off like a high. This is a high. Let's do it a bit of a brighter color so we can see. Cyan here. So we have this one up here. This is an origin. This is the origin of the move that went all the way down to here. And this is the origin of this move so far. Okay, so I'll reorganize this in the trades channel so that we can all see what's going on. But what we want to do is we want to, number one, we want to identify the origins. Text again. And once we've done that, then we want to identify the buy and the sell sides. Identify buy, sell sides. Okay. So number one, we identify the origins. This is the origin of this move, and this is the origin of this move. Okay, so once we've done that, then we want to start to look for price inefficiencies. I'm going to put that now, liquidity voids or imbalances. Just going to put that in there like so. I've got a little notepad next to the window that you can't see that I'm just writing this stuff down. Okay, so we have that. And this is important because okay, if we have an area of relative equal supply and demand, So we have relatively low volatility, we have liquidity that is moving from the buy side and the sell side, and from the sell side to the buy side, also known as value. So it's really windy up here on the first floor today. I hope it's not too noisy. Once you see these and then you see price leave, and I'll draw a couple of examples of these. We have one here. We have one here, and not all of these are relevant anymore. We have this one here. We have this one here. We have this one here, and this one here. And the reason these are important to us is because once price departs from an area of supply, like so, let's say we have that area of value. Price is moving sideways. This is a relatively low volume environment. Oops, and then price all of a sudden leaves. Okay, this is low volume here, and this is higher volume here. Okay, and rather this doesn't mean it's high, it means it's higher volume than what we can see here during this period of value. Because if we have extremely low volume during this period of value, volume, it doesn't require a lot of additional volume to make price have to travel pretty far. Okay, so if this is very high volume, then it'll require a little bit more to move it out. But if this is low volume, which areas of sideways price movement often are, it doesn't often require too much to move price far away. But the reason this is important to us is once price leaves, we leave a liquidity void in the wake of that move. Okay, and we always talk about black space. I've said this 1,000 times in the videos, black space. And this is because once we leave like an exposed move like this somewhere in price will very, very often begin to move back to the origin of this move to rebalance the move. Okay, and you'll often notice that when price moves down like this and finds an area of, let's say, demand, you'll see once price starts poking in there, you get these wicky candles, the spreads will widen, you maybe experience requotes. This is when price will, so you have low volume, you have slightly bigger volume, but that volume gets thinner and thinner and thinner at the very end of this move. So at the very end of this move, there's absolutely zero offers here, almost zero offers, until you move into this area of demand where there's going to be an increase in bidding. So we have these pools of liquidity located down here, and this will attract buyers. Okay, and so price comes back down, and then due to the liquidity void, price has a pretty easy time moving back to the reference point of the release, which is the origin or something similar to it. You often see something like where price goes up like this, and then it goes very far, and it'll come back to the origin or the reference point, so resistance becomes support, and then leaves. Okay, so depending on the structure of this, price may or may not come to the origin, which is here, or suffice to visit the peak that you can see here on this price structure. Okay, and so when you see something like that, price will very, very often move back into that. So you can see this one here. It'll have to be rebalanced. We have this one from here to here, and from here, I can't see the detail on here, let's just put it to here. Price will very easily move back to the origin of the move, which is this one, and for this move we have the origin here. So price will very easily move back into that. And so when you see price doing, we have a high, price moves down, we have sideways, it goes down, inefficiency, price has to revisit these price points here, and it does so relatively quickly depending on the time frame that we're looking at. So if you're looking on the 15-minute chart, it's probably going to happen during the same day. If you're looking on the monthly chart, maybe the same calendar year. It depends. Okay, so that's what we have there. Okay, so you need to identify those, because this is where price is going to gravitate to. Okay, so now we've done that. Now we want to look at buy and sell zones. So if you look at this, we're only allowed to look for supply and sell zones here. Okay, this is the sell side. And all that means is that we're only allowed to look for supply in this price here. Okay, so we're not allowed to look at supply here. It's not allowed. This is the buy side. So on the other hand, on the buy side, we're allowed to look for buys, so demand. We probably have something down here as well. Okay, and the reason we try to differentiate between the two is because if price is reacting at supply on the sell side, then we very likely have apparent supply. If we see something like that happening on the buy side, then it's going to be reactions to the supply on the sell side. So price could come up to this one here, okay, go like that, and then leave. But would that make this a good area to trade? It wouldn't. Why? Because this is not supply, it's a reaction to this supply, or this is the real supply. And so you wouldn't do that. You would just wait for this to get removed, then you would look for the area of demand that removed it, and then you would trade there in anticipation that price is going to move to the origin that you can see just here, which in an uptrend is a likely scenario. Okay, let's remove some of these lines. So now we want to look for these areas here. So we have a couple. Move all these lines here. So we have a couple. So let's just focus on. Let's have a look at the supply. It's going to change the color to red. So we have a lovely one here, a nice drop here. We have another nice drop right here. And there's nothing else interesting there. So we have those two. Okay, and the reason this is interesting is because now that we've identified the supply, now we can identify the sell zone. The sell zone for this area of supply is right here. Why? Because this is the deepest or the closest to the supply price was able to get to as it managed to move its way further down. And for this one here, we have something that looks like that, which is pretty close. Okay, so now we've identified supply and demand, identify supply, demand, and then point 5 is identify sell, buy zones, which we've also done. Okay, so now we've done that, we're pretty much through, because now all we have to do is expect a price reaction somewhere here or somewhere here. Okay, and so now we've found the supply and the sell zones. Let's look for the demand and the buy zones. So it's really difficult to see, but let's just, if the software found something here, let's just mark that off. I can't see if this is correct or not on this time frame. So we have that, and now we mark off the buy zone, which is the lowest retracement to that area. Let's just say it's there. Okay, so now we have some very interesting areas to watch, and we also have some targets marked off as well. So assuming now that price is now on the buy side, we're on our way higher, where would we get into the trade and where would we get out of the trade? Okay, we would get into the trade here between the buy zone and the low of the box. Okay, so this is the beginning of the buy zone. This is the worst price that we would consider buying at, and this is the best price that we would consider buying at, the low of the box. So you have anything in here is game. Okay, this is our buy zone. Okay, and then price comes down here and then it goes up. Where would we get out of the trade? Well, you'd probably get out of the trade, you'd start to get out of the trade here. And you'd have target 1 there, target 2 here, target 3 here. And if price just moves into a state of price exploration where it's trying to find new value, price could continue going higher. Okay, and then you have other areas here that you could consider as price figures out what value is for the current market environment. Okay, so then you have your entry, your stop, and your targets marked off like so. So this is a pretty nice and pretty easy thing to do. Okay. Another thing that I think we should remember when marking off the buy and the sell side of the market is the areas of higher probability. So first if we mark off this, we mark off the middle of the box, okay, and we'll put it into four sections. Okay, and so I mean down here, considering that we're selling up here is higher probability, we'll just put that at like a 9, and selling at supply in here is low probability, so 1, and the opposite for here. So buying down here is good, buying up here is less good. Why? Because we're approaching very high prices, so you don't want to buy at a high price. So when you look at it like this, it gives us kind of a reference, like a framework of reference where we can see where we have discount prices for buying, which is down here, and we have premium prices for selling, which is up here. And this is premium prices for buying, and this is premium prices for selling, rather discount prices for selling. So you're selling at low and you're buying high. So you don't want to be engaged in buying here, and you don't want to be engaged in selling here, because these are the two worst scenarios. It's buying high and selling low, which goes against all logic according to consumerism. So you want to be selling at high prices and buying at low prices. Okay, and you can mark those off on the chart if you want, but I think that for our example, I think we can just eyeball it, and we can just say, okay, if we're at the top of the box, it's good. If we're at the bottom of the box, it's less good for selling, and the opposite for buying. Okay, so this is the 4-hour chart. What about if we want to look on a smaller time frame? So let's go to the 1-hour chart, and we'll look at this. So looking at this, let's just grab another symbol altogether. Let's grab the pound American dollar. So here's one. Let's have a look here. So we do the same thing. First of all, where are our origins? So our origins, there's the origin of this move, and this is the origin of this move. Okay, so now we can mark off our buy and sell side, color red, like this. Okay, so we've done that. So we've done point 1, identify the origins, point 2, identify buy and sell sides, and now point 3, liquidity voids. Okay, where do we have liquidity voids? Well, we do have a couple. I'm just going to change the color of this. I'm just going to put it in cyan. So we have a liquidity void here, liquidity void here, got another one here, got another one, there's quite a few, got another one there, but this one, price is already rebalanced, so that's uninteresting to us. This one, price is almost rebalanced, but it has not yet been to this. Okay, so that's interesting to us still. And on the sell side, we have a liquidity void, a price imbalance originating from here. Okay, so this is interesting because it brings our attention to black space. Okay, black space in here. We have a little bit of black space here, and this brings our attention to the next part of this, and that is identify supply and demand. So on the green side, we want to look for demand. We have some demand here. I like this here. We're allowed to buy at areas of demand on this side, and for selling, we're allowed to sell at areas of supply on this side. Okay, so for that, our buy zone is there, and I don't see anything up here that I fancy. This is the only one I fancy. But I also see this one here, which I fancy as well. I really like. We have a couple of areas. I really like this one, and the buy zone is actually right on it. I really like those two. Those are probably the two that I would consider. This one is nice, but I would choose to look at this one, because when this is formed, the origin of this move is the low of the area of child demand, and so price had to, slingshot was pull back, and then we left. Okay, so but if you wanted to mark this off as a valid area, then you could, and we'll do that just for the sake of example. And the buy zone is the low of the deepest retracement into this area of demand. Okay, and as I said, we have no supply here that's interesting. Maybe on the smaller time frame there would be something here. The deepest retracement, and maybe there's something here. So that could be an interesting area to sell at. But that's what we have there. Okay, so now we have identified several demands and buy zones, and we've identified one supply and sell zone. Okay, so that's a very interesting one. And which one do you take? Well, that is a really good question, and the immediate answer would be, well, you take the one that's closest to price, because you don't know if price is going to come down here. If this one fails, it's probably the price is maybe in a state of price exploration and looking for new value for the market in its current state. Okay, so price will naturally look at historical reference points where we can expect to maybe bring some buyers off the sidelines and re-enter the market. Okay, let's do one more example. I'm going to do this one on a completely different pair, and I'm going to do it on the 1 minute chart, because you can do this stuff on any time frame. Let's go to the American dollar, Japanese yen, and we'll go to the 1 minute chart. Alright, so what do we have here? Do the same thing. The origin. I'm not going to mark these off because we know now. So this is the origin of this move, and this is the origin of this move. So we can go from here to here. Change the color to green. This from here to here. Mark off the middle of the box. You don't have to do this, but just for the sake, that's maybe a little bit higher. Okay, so now we are looking, we've done that, so we've found the origins. This is the origin of this move, and this is the origin of this move. Okay, now we look for liquidity voids. So where do we have liquidity voids? Well, we had this one here, and we don't really have anything here, do we? We don't really have anything there. So this is the one that was interesting. We found that. Okay, and providing that this wasn't there, we would expect price to gravitate back to the origin, which it did very nicely. And so now we can identify demand. Okay, and the buy zone would be the deepest retracement, which would be, assuming that this is the latest one, like this. I'm just kind of forcing this just so that you can see the example in the 1 minute chart. So this would be the trade setup here. Okay, so the entry would be anywhere between the top of the buy zone to the low of the area of demand. This is like our the entire buy zone. And to get out of here, we would look for price sensitive areas, and you can actually see that we actually do have, it's been tested many times, but you can see right here that this is a price sensitive area because it tested several times. So the sell zone for this area of supply is actually at the edge of supply. So that would be the sell zone there. So you'd actually put your entry here. Your stop would be above here somewhere, and your target would be at an opposing area. But I'm thinking that price will probably wriggle across because it already visited this area of demand, and so the scales are tipped to the advantage of the buyers here. Okay, so that's what we have there. Good. And so what we can do is we can simply mark them off. You can write the text on your charts, Okay, if I just yeah, so we can do it like this. The chart can be as simple as this. Okay, where you have, I mean, we if you're able to identify the buy and the sell side of the market, well then we know that you've been able to identify the origin of the moves on both sides. Okay, a liquidity voids, and you can mark those off in any way you want. You can just put like a circle on them, or you can put like for example, this one here, you could just go like that if you want, or you could just mark it off like that, whatever you like. These are important to us. Again, why? Because they typically rebalance. Okay, and then we look for the identification of supply and demand. We found some supply, and it has to be on the sell side. We have demand, and that has to be on the buy side. So we don't want to see any red boxes on the green side or any green boxes on the red side. Okay, cool. I'm going to leave it at that. Maybe I'll have to redo this a couple of times depending on everyone's feedback. But if this is a template for our future trade sharing, I think we're off to a good start. Okay, well, thanks so much for watching, and let me know if you have any questions.